So in this video, we are going to go over and cover structure from the very beginning all the way to advanced within about 8 minutes or so. Well, I'll time it for 8 minutes. Let's see if we can get there. So let's get started without further ado. So when it comes to structure, there's 3 different types that you will see when you're looking at the charts. So that's one where price is trending to the upside or we're moving up. We've got one where it's just scattergun approach, where price is printing lower lows, then higher highs out of nowhere. And we're not moving in a clear direction, we're practically moving sideways. And then we've got the good old trending to the downside. So those are the 3 types of structure that you're going to come across every single day, and that depends on obviously what time frame. The lower the time frame, the more of these you're going to see. The higher the time frame, you're probably going to see 1 or 2, but not all of them within a certain time period. So these are the 3 that we want to be familiar with and understand how we can get into trades with them. So let's go into this. So let's say we have price, and generally this is how it happens, right? So price is either moving upwards or down. Let's just go for up at the moment, and then we get to a point where we can see that price actually starts to mess around. So this is where we can see possible consolidation, or price starts to print us a very good reversal very nicely. So let's just go over consolidation. So we're doing stuff like this, right? It's not easy to understand where price wants to go, and then we break out to the downside or the upside. Let's just say downside because we're talking about a reversal situation. So how do we understand this price action? So one way we can do this, and it's very simple, is we just use price ranges. So what a price range is essentially your Fibonacci, like this, but we're going to tweak it. So we're only going to show the 0.5 level. Okay, so we show the 0.5 because we want to see if this retracement is a strong retracement, it's a good retracement, or because if price is like, let's say over here, then we can expect a deeper retracement at some point for the move. And then what we would do is, if we're looking for a deeper retracement, we'd go like that until the 0.5 is fulfilled. But essentially what we're going to be doing is we're going to be just looking at price. So price moves up, moves down, pulls up, and we will say that price is in a price range until the higher high or the low is broken. So obviously that one's fine. We can move to the next one. Price is moving up again, and it's moving up. So when we get to, let's say, this stage here, over here, right? So at this point here, so obviously this one, price goes up. That's all fine. From this point, we can see we got high, low. The retracement goes below the the 100% mark. So that means what we do is we switch. Okay, from here we switch. So now we'll be going from here to here. Okay, but then price breaks the 100% mark again. So now we shift again, right? So now we are here to here, right? Looking for a retracement, and we get one. We get some sort of move back up. We pull back down again. It gets respected, and then we go back up. So do you see how we are using this price range to understand which direction price is going in without getting too confused in terms of breaks of structure, what that is? But I'm going to cover that in a minute. So price is showing us we're going to the upside, we're happy here. So now when we get to this leg, we're going to be like, okay, we're moving up, draw the price range, and then we break down to the downside again, and then we again switch. So essentially what price ranges do for us is they give us an idea of which direction to look for trades in, which direction price is going in, without getting too confused into what price action is showing, with loads of breaks of highs, breaks of lows, higher highs, higher lows that are just not consistent with the trend. And so obviously here we can see we finally break down, and then we finally get to take trades consecutively, or be consecutively correct in the right direction. So that's what happens with the consolidation. This is the hardest thing to do. A lot of people, what they can do when you're trading these is you literally just put a box around and then wait for it to break out to the downside, and then you can use a price range like this to trade the retracement, and that generally has a good success rate as well. It's what I would do in most cases, but as you know from my channel, the way I trade with specific strategies, I don't get involved in this too much. So that's one example. Let's remove that. Now let's go over a very similar example, but with price action that we're probably more familiar with, where we get something like this.
Top, 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 top.
So in this case, obviously you can be using price ranges going up here, looking for good retracements, and then looking to utilize the golden zone, like I mentioned in my previous video, into getting into trades. But you can also look at trading from a perspective of breaks of structure. So essentially, if I mark these out here, so we got a break of structure here, we're moving to the upside. Break of structure here, moving to the upside. So we know we're trending if we keep breaking structure and moving to the upside and breaking those higher highs. So high high, high low, high high, high low, high high, and then we got a higher low here, and then we expect a high high. So that's how we know we're trending, right? So what happens when we're printing high highs and higher lows, but then we get a lower low, which is what we get over here? So this is when we know we have a breaker structure, and this is what we call a breaker structure. And this is when we can expect that, okay, it's maybe time to draw on our Fibonacci. We're going to look for a reversal now, because price is indicating that it's no longer happy to trade above these prices and it wants to trade lower. And so that's when we get this move to the downside. And then, you know, as you saw previously, I had these two levels marked out, and these are two levels that form the golden zone, and that's when you can look to take trades to the downside. You can look for order blocks, you can look for fair value gaps in this area, and you can take you know, as many trades as you want, looking for trades to the downside with risk in mind. And this is what I would do when it comes to structure, and it's very, very easy to do this. I use this all the time now. It just solidifies what order blocks and fair value gaps I can pick and which ones I shouldn't pick, especially if they're lower than the 50% mark. Then I wouldn't even be looking at them, if I'm completely honest with you. But what I tend to see is a 0.786, 0.618, any fair value gaps within this region generally works really well. It also helps for stop loss placement. Again, I go over that in the previous video. If you haven't seen it, I'd recommend you go check it out. So obviously I've gone over this now. You sort of understand how this all works. So let's have a look at an example, and I'll show you how higher time frames play their part as well. So let's say let's just look at this piece of price action over here, right? Price is moving to the upside. This is like very exponential movement, right? We're not getting the best, especially on the 4 hour time frame, best structure on the way up. But what you want to be looking for is like structure like this, right? So now we're starting to see, as we get to the top where price starts to pull back, we start to get some structure, get breaks of structure and stuff, and then price is moving down. So when we get a leg like this down, where we're like, okay, price is moving down quite nicely, we'll start to move back up. That's when you'll probably be looking at using your Fibonacci. Don't know what happened there, I think my internet went. But if we go back to the 4 hour time frame, we can see, obviously I drew out this box here just to highlight the price action we're looking at, and price moving within this price action. But then what we see is we get this sort of like retracement to the downside here. So from here to here, and that's when we're going to be looking at price coming into the golden zone. But also, because we've got breaks of structure here, where price breaks it, not here, because we don't count wicks as breaks of structure, we count candle closes. And then when we get this break of structure, so let me just highlight it there, we can then look for a retracement back. And because we can use these price ranges into these retracements, we can see where price can reverse from. So obviously with the 4 hour time frame, we can move to the 15-minute time frame, and what you will see, and this is why I'm going over these price ranges and using the higher time frame as well to show you how it fits in, is what you will see is when we go to the lower time frames, we can see obviously price is moving up on the 15-minute. It gets to this point here, and then we get a higher high. So there was your previous low, your new low, so it's still higher low, we're still moving up, and then we get a lower low here. So we break the low. We're not going to count this as this is news, and we don't really want to be counting news candles, especially wicks like that. So that one gets broken by this price action here, and that's when you can see we get a retracement into a fair value gap for a trade down on the 15-minute time frame. And again, very simple, let's say, example here that covers how structure can be used to take trades and ensure you're trading in the right direction. So for example here, obviously this was counter trend, actual trend is to the upside, and so that would have been more of a risky move, but you could have done the exact same thing here, although the leg here is a lot longer, so we don't want to actually get that 50% on this side. And I guess that's all I wanted to really cover in this video is, you know, structure is super important. Make sure you're drawing it out properly, use price ranges, and make sure you're looking for breaks of structures here and there as well.